Good morning, trading world. It is March 13th, 2023, 8 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's pre-market today is all about the CPI print and how the Fed might interpret the numbers. The CPI print hits at 8:30 a.m. this morning. Because of all the banking scares, there is a choice to be made. Lay off raising rates to help banks or continue raising rates and fight inflation. I expect a mindless run-up just before CPI print. A hot CPI number, and the market interprets it as the Fed will and must continue raising rates. A cooler CPI number, and the market will interpret that as the Fed is less likely to raise rates. I don't like these CPI reports because they lag and they take out all the true things that really measure inflation. So expect a rise into resistance going into the print, and the CPI print itself could knock us back toward the 380 level on the SPY. I think this is setting up for another scare going into next week as we approach the FOMC announcement. Whatever happens today, I don't really see as that driver to really push us to break the low side of the volatility box I talked about yesterday. That brings us to the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we had our Jack resistance level, which is 387 to the 388 area, which has already been violated. Our Queen resistance level is 389 to the 390 area. I expect rejection possibly somewhere around here. As we speak, I'm watching and waiting to get short around this level. And we have our King resistance level 391 all the way up to the 393 area. I wouldn't be surprised if we popped up to this level. Even during the CPI report, if it came out cooler than normal, we could get a pop up here and then kind of a trail off at some point during the day. On the support side, we have our Jack support at 385 to the 384 area. Queen support 383 to the 382 area, and then King support 381 down to the 378 area. The main thesis for today is bearish, closing below the 385.36 with a projected target low of between 385 and 378. The alternate thesis is bullish, closing above the 385.36 with a projected target low of, with a projected target high of between 386 and 393. The main channel we are in is from 397 down to 379. The main channel below it is 379 down to 364. Yesterday, market strength and breadth took off to the upside, found its resistance, rejected it, then pushed through it and went range bound the rest of the day. I expect strength to open possibly weaker after the CPI print. We could get some pushback. But right now we're headed for a strong opening. This is all before the CPI print. So I'm projecting that we take a tumble at the actual CPI print. We do have dissonance between the technical side, which is bullish, and the quant side, which is bearish. So I could see us continuing to push up for some reason. If we continue to go, that upside target that I'm looking for is going to be 393, and it is even possible to have a really wild day and hit a little higher than that, up toward that 395, maybe 396 area. But that's only if the numbers come in wildly cooler than anyone thought. With that, let's bring up the scenarios of the day. All right, our first scenario is going to be our expanded range day structure. We could begin the day with a continued push lower or follow through from the CPI print. At some point today, we will get a consolidation reversal and start back up on the day, and possibly get a little follow through in the overnight session. So that's our expanded range day structure. All right, our next scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen support area, find midday chop around either the Queen or possible King support before going back up with the same energy of force we went down with the first part of the day. That is our rounded reversal day type structure. All right, our last scenario is going to be our trend day down, which meaning we would get a huge spike down on this CPI reversal, taking us below the previous close, giving us the open gap down. And we'd start with a push back toward that previous close, find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible Queen or King support area. Not always, but a lot of times you can see where we'll begin the second part of the day looking to continue the primary trend of the morning, which would be down. And it would turn into a head fake where at some point we would get some traction and get some type of rally into the close. From here, as it looks right now, the vice versa scenario is in play on the trend day, as we're more likely to get a trend day up. And what that would look like is that we would still open gap up and get a pushback toward that previous close, find support on or before that previous close, and then get into our trend day, which would be up, find our midday chop around the possible Queen or King resistance area, get that head fake coming out the second part of the day, and then more than likely a fade going into the close. So those are the scenarios that I'm looking for. I neglected to mention there is a vice versa alert on the rounded reversal day type structure. Instead of opening lower, we could possibly continue higher and see a fade during the second part of the day. So those are the scenarios that I'm planning for. Again, this is all leading to the FOMC announcement next week, where I think we're going to get the biggest scare in this volatility box as far as possibly breaking that lower end of the volatility box at some point. So that's what I'm preparing for. Be very careful today because it's pretty much binary. CPI numbers come out cooler, we shoot to the upside. Hotter, we get a huge retraction to the downside. I hope this helps. Remember, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we put on in each position, and we manage that risk in accordance to our account size. Wishing you a positive trading day. Let's go out and make it a great one.